We build intelligent tools for traders to squeeze every last drop out of the market. In this video, I'll demonstrate how you can use our simple indicator to quickly spot subtle shifts in momentum and then clearly identify where to take profit so you could stop round tripping your trades. We're about to go through a couple examples of how you could use the indicator across different markets, including Bitcoin, commodities, and Forex. Everything I'm sharing with you today is meticulously backtested, but I encourage you to use the indicator and see for yourself. You can also combine the reversion band with other indicators as a point of confluence or invalidation for existing trade ideas. Let's dive in. The first thing you're going to want to adjust in order to suit your needs is the confidence level in settings. The indicator takes in multiple data points and issues signals based on those data points, but you can adjust it as needed to either issue more or less signals. You'll notice a varying amount of signals across different asset classes, but let's start with Bitcoin at a confidence level of 0, meaning only strong signals print during significant momentum shifts. The first thing you'll notice is how the price action interacts with the band. When the band is green, it signifies an uptrend. When the band is red, a downtrend. Loosely speaking, you're going to want to take into account the trend, whether it's bullish or bearish, when deciding if you're looking for long opportunities or good entries for shorts. As you can see, Bitcoin is currently in a downtrend on the 4-hour with price sitting below the band. The three most important points of the band are the lower boundary, the upper boundary, and the midpoint. Now let's go back to the last signal printed here. The signals print at the close of the candle. As you see, the band is green and price respected the midpoint of the band twice, bouncing off it here and here, but it was unable to sustain above. It got sold off every time it got above. After the buy signal printed, you're going to want to drill down on smaller time frames and look for a good entry. Also, determining your risk is very important, and you can use the band to decide where to place your stop loss. To simplify, let's say you decide to enter a long position as soon as the buy signal prints at 16,997. You could place your stop loss slightly below the midpoint to keep the risk low, or you could place it below the bottom boundary of the band to avoid getting wicked out, especially considering this is a higher time frame trade on the 4-hour chart. So your entry and stop loss are defined. Now where to exit. 12 hours after entry, the price is at pretty much the same level. But 16 hours later, the price is about 1% above your entry. But more importantly, price is now above the band and the trend is bullish. How you manage your trades is entirely up to you, but at this point I would suggest moving your stop loss to break even for a risk-free trade and planning your exit points if you haven't already. If the price is accepted back into the band, meaning a 4-hour candle closes back within the band and is selling off at the upper boundary, then you can either take profit and wait for a better entry to confirm. You could close 50% of the position and leave the remaining 50% of the position stop at break even, or you can see that price is now treating the upper level of the band as support and wait for the price to close back within the band to close your trade. If we take the third option, you would have bought 16,990 thereabouts, and you would have sold all the way right up here in one of these two candles around 21,071, netting you a return of almost 24% in, 10 days. We're currently building a way to automate these trades with a bot that will be made available to you for free, just as this indicator is, so make sure you hit that subscribe button to be first in line and get the algorithm going on our new account here. We also have a free analysis group on Telegram that you can join at rectedge.com. That comes with a metric ton of resources that we compiled for you. The link is in the description box. Now let's move on to a Forex pair. Looking at Euro USD, you could see what do you notice here at first glance? There's a lot of noise on the chart. Too many signals, right? If this suits your style, you like to have exposure to as many trade ideas as possible, then great. But if you're like me and you prefer less noise, then you're going to want to adjust the confidence level. For this demo, we'll set it at 2. Now, it looks a bit more clean. I don't want to cherry pick signals here to only show you winners, so let's run through a few of the last signals. Again, this is on the 4-hour chart, so when you're ready to enter a position, you're going to want to drill down on a smaller time frame to get an entry. This band works well both in ranging conditions and trending markets, but we can see the last couple months price has been ranging. So we're going to take that into account. This is how you might play a couple of these signals. Let's look at ones that have a trend confirmed before entering a position. So if we take this buy signal here, we wouldn't have entered at the close of this candle. The band is still red. Price sold off. Then it reclaimed back within the band. The trend shifts green. For me, that's a good buy signal. So I would be buying once the candle reclaims back inside the band, somewhere around 1.053. Stop below the low. And then your exit points should be target 1, midpoint, target 2, upper boundary of the band. And if you would have laid out your trade like that, that would have been good for 3R within a couple hours. Now let's take a short signal. Here, the band is having some confusion. Red, green, red, green, red. When price spikes up above the band and then you get a short signal, the band is still green, but it's having a bit of confusion, and then it comes back within the band. This would be a reason to get short. You could see price got bought back up into the upper boundary of the band and then sold back down. This is where you'd want to enter your trade. Stop above the high, target 1, midpoint, target 2, lower boundary of the band. And you can leave some of your position on if you think we're going to spike lower. But be mindful that you always want to move your stop loss as you take profit. Now, let's go through another example. Let's see how well the band works on a commodity like gold. If we look at this chart, we have the confidence level set at 2, so it's not too noisy. Let's go back and find a good spot where we would enter a trade. This one is similar to the Euro USD trade. Spike up above the band, sold back in. Couldn't even get to the upper boundary of the band. This would be not the greatest trade, a bit risky, but you could enter here, 1944. Stop above the high, 1960. Target 1, midpoint, 1929. Lower boundary of the band, 1912. So it would have still been a successful trade. As there aren't too many signals on gold currently, strong signals where the trend and the signal both align. Let's just take a look at how the price interacts with the different points of the band when we're in a ranging environment like right here. Price sold off into the band, pretty much held the midpoint of the band, got back up above, tested the midpoint of the band as support, rallied to the upper boundary of the band, sold back off to the midpoint, rallied again above the band, sold back off to the bottom part of the band, back to the midpoint, and you could see how well price respects the boundaries of the band, including the midpoint. So this is great to find entries. If it tests the underside of the band in a downtrend, you'd be looking for shorts. If it tests the top side of the boundary in an uptrend and holds as support, then you'd be looking for longs. So it's a good point of confluence for your trades to be thinking about how price interacts at the different extremities, and you can use it as invalidation for an idea you have, or you can use it as a point of confluence for your trade ideas. Now that you understand how powerful this indicator can be, I encourage you to try it for yourself. It's completely free. Link is in the description, and to get access to our cache of resources, head over to rectedge.com, and I'll see you inside the community. Thanks for watching.